What's up, builders? This is Raise the Bar Radio, where we talk about building wealth, raising capital, and all in all, raising the bar in your business and your life. This is the No BS podcast for capital raisers, investors, and entrepreneurs who are serious about scaling their business and living life on their own terms. I'm Seth Bradley, securities attorney, real estate investor, and entrepreneur, bringing you world-class strategies from the best in the game. If you're ready to raise more capital, close bigger deals, build a better you, and create true financial freedom, you're in the right place. Let's go. Welcome to Raise the Bar, elevated conversations around entrepreneurship, capital raising, and real estate. We got my buddy Chris Salerno, CEO of QC Capital. He's a prolific entrepreneur. His incredible success has earned him recognition on prestigious lists, including Charlotte's 30 Under 30, Elite 50 Entrepreneurs, and 30 Under 30 Entrepreneurs. Chris, man, great to see you, brother. Welcome to the show.
It's always a pleasure, my friend. I love it when you come to Charlotte. Thanks for having me.
Absolutely, brother. Good to see you. Good to see you, man. Well, let's just jump right in, dude. What are you obsessed with right now?
Yeah, obsessed with, if we're talking real estate and investments, I'm obsessed with flex industrial and car washes. Those are our two things that we as a company are passionate about, and we're obsessed with it. Everything and anything when it comes to flex industrial and car washes.
I love that, man. Those are some niche spaces, at least for most of us out there. Let's dive into that a little bit. Like, tell us about how do you get involved investing in a car wash from your side and from maybe even your investor side as well.
Yeah, most definitely. I will say, and I'm not just saying this, it is a lot easier to just be a passive investor into a company like ours in the car wash sector. It is highly operational type of business. Every single day, you have something that is going on at the site because you have a lot of moving components. It's not just washing a car. You have a lot of sensors. You have a lot of anytime you deal with water, it causes a lot of problems. So it's a highly operational type of business. So I always recommend, hey, before you actually want to go do it yourself, partner with a company like ours, invest with a company like ours, gain the knowledge, and then go do it. Because a lot of investors I've had calls with decided to go just do it on themselves. And I'd get a call back, and they're like, can you buy the property from us? Because we don't know how to do this. It is a lot going on. And I tell them no. So I would say invest with a company like ours where you can really get that hands-on experience. And it's an asset class that is growing substantially. It's still about 75-80% mom and pop, but private equity is flooding in because of that reoccurring revenue stream that we have with our memberships.
Yeah, that makes a lot of sense. I did the same thing. You probably did it as well. Invested passively into even multifamily. I was back in multifamily, did that first, kind of got the feel for it, seeing things from the investor side, seeing how to invest in large apartment complexes before I started raising capital and operating those types of properties. It's kind of the same deal, but probably even more so because it is so, it's niche, it's operationally intensive, things like that. Tell our listeners a little bit about the scale you're doing at. You're not just buying, this, one little car wash down the road attached to a gas station. I mean, tell them a little bit about the scale that you're kind of operating at this point.
Yeah, so there's really 4 different type of car washes out there. You have full service, you have flex, which is a mixture of full service and express. You have express, and then you have your in-bay and self-serve that are together. And we focus on the express model. And Seth, you're right. We're not just buying your little one-off express or your in-bay. We're buying we're buying express car wash tunnels throughout the Southeast. And right now we have 8 under development. So we're developing 8. We have 8 operational, and I anticipate us to have 30 by the end of next year. We're moving very quickly on that. We have a handful of sites we are currently looking at for just acquisition alone. So we are bundling these sites up essentially throughout the Southeast. So the Carolinas, Atlanta, and Atlanta's MSA, and then Florida, really central Florida and down on both sides of the coast. So what we're doing now that we've already acquired in these strategic cities, we're building out that presence. So we opened up development. We are now building out that presence throughout those cities, which we're very, very excited about.
Yeah, and size of the fund. What are you getting ready to launch here, man?
Yeah, we're launching a $50 million fund. Should be launching
Yeah.
next week, actually, which we're very excited. We have close to 20 million already committed from previous investors into that fund. I do anticipate that 50 million to probably be fully subscribed within a couple months, just because of the attraction that we've had. The great thing, Seth, is that that big beautiful bill that came out gives us the ability to take 100% bonus depreciation until 2029. Well, with car washes have a very unique tax code where we can actually depreciate the asset at a 15-year depreciation schedule. So what we anticipate for that fund in the year of 2026 is a minimum dollar for dollar tax depreciation K1 write-off loss on your investment when investing into our fund number 3. And that's why investors love the car wash sector as well, is because the tax benefits are substantially high.
That's awesome, dude. Yeah, and I'm sure you're super excited when that big beautiful bill passed.
Oh my God. Funny enough, I just got my tax refund bill, or my tax refund check, $54 the other day. So I'm excited.
Where are you gonna spend it, dude?
I don't know, maybe a Starbucks cup of coffee.
Nowadays, that's about all you can get. It's crazy, man.
I know, Starbucks cup of 2 cups of coffee, runs you about $20 these days. So
Yeah.
the price of coffee beans and inflation's creeping up there. But yeah.
Yeah. Tell us a little bit about raising capital right now. You're having a ton of success out there. You're launching a $50 million fund, so you're obviously confident in raising capital. A lot of folks are having trouble right now. It's difficult to raise capital. Investors sitting on the sideline, kind of just waiting. Economy's kind of up and down. Well, it's actually up right now, but people, I think, perceive it as up and down. So they're kind of sitting on the sideline. So what are you seeing out there? How are you having success?
Yeah, you're spot on. And if those listeners don't follow me on Instagram, please do. It's just Chris_Salerno_. And I just posted a video this morning of Jamie Dimon, a phenomenal guy. I had the pleasure to have lunch with him a couple months ago. Very intelligent individual. And he was asked the question, are we seeing a recession coming soon in 2026? And he says, I don't know. It's so up in the air. It's so hard to pinpoint it. Are we going to see it? Are we not? We're seeing high unemployment rates. We're seeing individuals who are very successful and very knowledgeable have to sit on the job market a lot longer because people are not hiring. So it's definitely very difficult out there. I would say for anyone out, anyone listening or watching, the biggest thing is what product are you showing and pitching to investors? And with all respect, I love multifamily. I think it's a necessity. We need shelter. However, it is not an attractive asset class anymore. A lot of investors got burned. I've gotten burned in the multifamily space. A lot of investors gotten burned in multifamily. It's not an attractive asset class. It does not produce the cash flow. There's too much risk right now and too much headwinds against that asset class. So yes, that asset class can be extremely difficult to raise for. Even just and I would say anything under 10% annual returns are very difficult to raise for. If you cannot offer anything above 10%, if it has to be below, it's going to be difficult to raise for. And that's just what I'm noticing amongst speaking to other operators in all different type of asset classes. That's industrial, storage, multifamily, even retail, strip centers. That right there is causing a huge difficulty in raising capital because it's not above that 10% annual cash flow. I think investors' appetite right now, they want cash flow. Why? Because the appreciation is so uncertain given the current market environment we're in. They want that cash flow right now.
Totally. And that's what I'm seeing out there too, man. We get a pretty broad view of what people are investing in, what people are raising capital for out there through TribeVest. So, we're seeing a lot of different asset classes kind of come to the top because they cash flow.
Yeah.
Seeing a lot of
you have one of the best data, softwares out there, really, with TribeVest to see, all these different type of funds and different type of asset classes, who's raising capital faster than others.
Yeah, private debt funds, things like that, oil and gas, when they're structured correctly,
Yep.
cash flow out of the gate. That's what investors are looking for. They're trying to de-risk their investment. As you said, a lot of them got burned from multifamily over this last cycle, and they're looking for something else. And there's not a lot of cash flow right now with multifamily. A lot of people would argue that it's a good time to invest in it,
I agree.
hoping that the market is going to turn. But while it's kind of waiting, there's no cash flow,
And,
right?
and I
So.
agree with them. I think now's the best time to invest because, in my opinion, we are at a very troubled market economy, and I think now's the best time to invest. Blood's on the street. However, you have to understand your portfolio on what do you want. Are you looking for cash flow? Are you looking for a mixture of cash flow and just appreciation? I think right now multifamily is 100% appreciation. Even Class A or Class B, they are not cash flowing. So if you're going to make an investment into a multifamily asset, I would just have that knowledge of and expectations of, okay, I'm investing into this for what will happen in 5 years for appreciation. I'm not investing in this because I need this cash flow. I would have that expectations if you're investing into the multifamily sector, given the current market environment.
Totally. I think you're spot on there, man. What strategies are you using? I mean, how are you building that capital stack right now? Do you have other folks that are raising capital with you, or are you using fund of funds, or are you using RIAs, institutional partners? What are you getting into nowadays?
So it's really across the board. I mean, what we've gotten into previously is fund of funds. We are a phenomenal partner, TriVest. Shout out to Seth and you guys at TriVest. You guys have done a phenomenal job facilitating our fund of fund partners. So we really like to work with our fund of fund partners who can raise capital and who has an interest in the ability to raise capital through a fund of funds approach. We have had RIAs recommend us. CPA firms. I'm going back on the taxes. The tax benefits of these car washes. CPA firms have been recommending us substantially to their clients who need that tax depreciation. Family offices love our product as well. Moving forward, we're working on very closely getting on Charles Schwab's platform so we can open up this opportunity to more of those individuals and those financial advisors who are advising their clients on tax benefits and also higher alternative investments instead of the public market. And so that's why for really the next 3 to 4 months, our team's focused on getting on Charles Schwab's platform so we can offer that product in 2026 to those financial advisors where they have an opportunity to offer to their clients a high cash flowing alternative investment.
Interesting. And we talked about this before the show, and that's really interesting. I don't think most folks kind of in our circles, influencer space, that are syndicators, that are launching funds of their own, think that getting on Charles Schwab is even an option. How did that come about, and what does that unlock for you if you're able to move that forward?
Yeah, I mean, I think it unlocks what's the number? 11 trillion that's sitting in retirement accounts. So
It's a little bit of money.
yeah, just a little bit. It doesn't unlock it all, obviously, but we came about it because we have RIA partners already, and the conversation got brought up during negotiations and during our partnerships is, hey, have you ever thought about being on Charles Schwab's platform? That can open you up to more individuals like us. And especially with the retirement accounts. And we said, well, we've thought about it, but we need that guidance. And thankfully, our close RIA partners have become very close friends of us. I attend church with them on Sundays, and we were able to go ahead and say, okay, well, make the introduction to your rep at Charles Schwab. Let's go ahead and go through this process to open up all of our opportunities, our flex space, our car washes, and soon we're launching a liquidity fund, which offers high cash flow and the ability for you to call your capital within 90 days on the Charles Schwab platform, so we can help individuals be a part of these asset classes and help these advisors take advantage of these alternative asset classes.
So you're able to list private offerings on the Charles Schwab platform, which will give you give RIAs access to actually, put their clients in front of you.
Yes.
That's incredible. That's incredible, man. That would be a massive, massive unlock.
It would be a huge unlock, and the way and the ability our capital raising team has the ability to capital raise, and our marketing team to market to bring in investors. I think it's going to help tremendously. One, for the organizations of the car washes and flex space to raise more capital, to buy more deals, and then also to have these investors have an opportunity to invest in these type of alternative assets, which are producing higher cash flow returns than I would say 95 to 98% of the public markets.
Yeah, that's what I was about to jump into. It's not just benefiting you, but giving access to investors to be able to invest in these things, because it's all about the democratization of the private investment world.
And if you're an investor, you should be able to have options. You should be able to have options to pick where you want to invest your money, not guided to a point to where you only have one or two options and it's not in benefit of yourself. And so our goal is to make sure that we are giving these financial advisors another option for their clients, especially in the alternative sector, to build wealth and to grow their capital.
Yeah, and we're still in the wild, wild west phase of this, right? The Jobs Act in 2012 is what changed this, for you to be able to solicit, advertise private offerings out in front of investors. Because before that, it was country club deals, we like to call them, right? You had to know somebody that knew somebody so that you could invest in a private offering.
And I
the
think,
same.
yeah,
Go
I
ahead.
don't mean to interrupt. I think
Good.
between me and you and Seth and everyone who's listening and watching to this, I think as time goes on, I think you're going to see those rules and law policies change. I think they're going to be shifted and changed, where more and more people can have access to these private offerings, and a different level of people can have access to the private offerings. To touch on. There is a lawsuit right now between the SEC and a non-accredited investor. I don't know if you've seen this, but a non-accredited investor is actually suing the SEC because he cannot invest into a 506 deal. And he is saying that is limiting his rights to go ahead and invest into a deal just because of the SEC putting out a rule and policy. But yep, there is an active lawsuit out between a non-accredited investor and the SEC, because the non-accredited investor got turned away. Great job to the sponsor who turned him away, because we still currently have those rules and regulations in place. But yeah, he is suing because he was not able to get access to an investment that he wanted to be access to.
Pardon the interruption, but we don't do ads. Instead, know that if you're raising capital for real estate, my law firm, Raise Law, is here to give you the expert legal guidance you need to raise capital compliantly and structure and close your deal. And if you're looking for a done-for-you fund-to-fund solution, TribeVest is the industry's only all-in-one setup and fund administration solution. Visit raise.law and tribevest.com to learn more. That's really interesting. Yeah, I mean, it's going to be, there's going to be deregulation through regulation. There's going to be more access, right? I mean, think about the parallels of like the 1930s Acts, the 1940s Acts. The 1930s Acts actually created the SEC. 1940s Acts actually created investment companies, investment advisors, mutual funds, pension funds, things like that. But it actually took until the 90s where the internet was created. Oh, yeah. And that technology, along with those regulations from 50 years ago, came together, and that's where you got E-Trade and Ameritrade and all those types of things that gave people access to the public markets. So now we're talking about the private markets, and people are trying to get involved there.
Well, Robinhood just launched a private fund for alternative investments.
Yes, I saw that. I saw that. So it's a race, because we've got the technology now, right? Even with AI. AI came along during our real estate slowdown here the last few years too.
I was just going to say, think of this. They launched ChatGPT in November of 2022. So it's only been it's only been 3 years since ChatGPT has been launched to the public. And now
think about
how
that.
ChatGPT is right now.
Right.
So we are moving at such a rapid speed of growth with technology and AI. You're going to have to start changing these rules and policies and regulations to open it up, because people should have options. They should have options to where they can invest into the private sector, not just go to the public sector and invest in only what is listed on the public market.
Exactly. And technology is going to get us there. It's going to get us to that, that professionalism, that compliance, that safety, right? Like it's kind of the wild, wild west right now. Like I said, you've got different platforms and different technologies out there trying to race to give people access to these things so that they feel safe when they, just as safe as like getting on your
100%.
Robinhood app, right?
I
You feel
agree, and
safe.
I think that is super important. And I was just thinking about this while you and I were talking. Why not open it all up, but put on regulations and rules that private companies now have to file quarterly, and they have to have third party auditing teams. Yes, it costs more money, but you're opening it up. And that's how you can regulate that. There's third-party auditing teams that are auditing the private company's financials to make sure that they abide by the rules and regulations. They're going to have to do something to change it, because I think more and more people are going to start demanding their ability to have options.
Yeah, no doubt about it. No doubt about it. I mean, you're seeing a little bit of it with expansion of the accredited investor definition, maybe possibly the ability to take a test to become an accredited investor, things like that. Trump came in and said we're going to loosen the 401k options to make it easy to invest with your retirement account. We'll see how all that stuff pans out, but you're seeing it. You're seeing it. Incremental improvements, again, deregulation through regulation to allow access for people to invest in the private markets.
Correct. Spot on there.
Yeah, brother. Let's change gears a little bit, man. I always like to ask this. There's always a time in our lives where there's a few pivots, right? We could have done different things. You're incredibly successful, buying tens of millions of dollars of car washes and industrial spaces. But what's a different version of you in a parallel universe? One of those pivotal moments. And I'll just give an example. For me, it was I went to med school for about a year and a half, and then I dropped out because I hated it. I knew it wasn't for me. I had that entrepreneurial bug. But that could have been a totally different life. Not a worse one, a different version. Tell me one about you.
Yeah, I was going pre-med to be a plastic surgeon, and then I dropped out because biology and chemistry whooped my butt, and college did. So that's funny that you were going through that. I would say a pivotal moment was during this downturn that we've had with interest rates being so high. I learned from my personal portfolio: do not put all your eggs into appreciation plays. And not cash flow plays, and open up to see a broader range of options. And I think you're seeing it open up a lot of individuals' eyes, especially with this slowdown that we've had the past 3 years of getting into more business opportunities like a true private equity company. And I think that private equity company term gets thrown around so much. If you're just focused on real estate, you are a real estate company. You're not a private equity company, you're just a real estate investment company. Private equity companies are investing into businesses, not just the propco, but also the opco. So they're investing in the operational businesses of growing businesses and then selling those for profits. And I think that's what interests me a lot. And what I've seen previously is that I saw where the market was going. I had an aha moment of not putting all my eggs into appreciation real estate plays. Now, don't get me wrong, I still have some, but not putting all my eggs into that, into pivoting into a car wash play where you have a real estate play, but it's mainly an operational business, and you're operating that type of business to become successful.
Totally. And I've seen the same thing. And I mean, I'm sure that you've seen, a lot of folks that were in our space, let's say 5 years ago, get washed out because of this and they went back, they got their W-2s, and they say the same thing. Cash flow. They wish they would have focused on something with cash flow. Everybody was banking on appreciation. Everyone was banking on multiples, things like that just didn't turn out. And now they're back in their W-2.
It's sad because you can't trust the market. Jerome Powell held rates so high because of last year's and Q1 of this year's labor statistics. Well, come to find out, I don't know if you saw a month ago that Q4 of last year, they were wrong by like 899,000 jobs.
Yeah.
That now you're looking at yourself like, well, I went off of that. Now I have to erase that. I should have dropped rates a lot sooner. And so I think, in my opinion, you're going to see the rates drop lower and then come up a little bit for stabilization, because all this false data that they've been receiving, they've been holding the rates so high based off of that data, and then they're realizing, oh, wait, that data was inflated. Now I'm in trouble. So.
Yeah.
We'll
What
see
do
what
you
happens.
make of that? What do you make of not being able to trust statistics and not being able to trust things that are presented as facts that come out and then later they're like, you know what? That was wrong. And then they do it again and they do it over and over again. It's like, what in the world are we supposed to do? How are we supposed to react to those things?
You have to be able to pivot. And if you do not pivot, you'll be out of business. I mean, look at COVID. COVID made a lot of people money, and it made a lot of people go out of business. And the people that went out of business could not pivot fast enough and or had the knowledge to pivot. And so I think you should always be at a point in your company where you have the ability to pivot very quickly. And that's what I love about my team and everyone that works at QC is that they know and they feel comfortable about pivoting very quickly. In certain circumstances that are out of our control, it's out of my control that Powell kept the rates that high. That is out of my control. It's out of my control that he is getting false data. However, what is in my control is the decisions I make based off of the interest rates and the current investments that I'm seeing. And so I think it's super important to make sure that you're able to pivot. And you think of that when you make investments of, do I have multiple options on the back end if X, Y, Z plays out? And if you think that way, I think you will really come out a lot better.
You nailed it. I mean, I think that's one of the biggest, if not the biggest differentiator between a successful entrepreneur and a not successful entrepreneur is just the ability to deal with change on the fly, right? Like how much discomfort can you deal with before you lose? Like how much can you deal with, you and your team, right? Like the people around you that you surround yourself with, when you're hiring, when you're firing, they've got to be able to pivot with you, got to be able to deal with change, got to be able to deal with false statistics and reacting to that and saying, oh, all right, well, let's pivot and we got to go the other way.
I can give you a secret to help limit your hiring mistakes to find the right person too. You want to hear it?
Let's hear it, buddy.
Hire an athlete.
I love that.
Because athletes know how to work under pressure. They know how to pivot. You know, you're throwing different type of plays in maybe 2 days or a day before a game. You know, you're always throwing different type of plays in. You're taking different type of plays out. You're putting different maneuvers in. And hiring an athlete will help limit a lot of those mistakes. And really, you'll see the motivation, the drive for everyone to win as a team.
Totally. I see the same thing. Actually, when I see that on a resume or it comes up in an interview, like that is a massive plus because of that. They can deal with change. They're motivated. They know how to work hard. There's just so many different attributes that come along with that. Even if it's at the collegiate level or above, like unbelievable. Because for you to be able to perform at that level, you've got a different mindset. You know how to work hard and you know how to deal with change.
Yep. Well said.
Yeah, brother. What's one limiting belief that you've had along the way here on your journey, and how did you overcome it?
Oh no, that's great. I try not to have many limiting beliefs. To be honest with you, nothing's impossible. That's my saying is nothing is impossible. You just got to figure out how to get there. You got to figure out how to do it. And if you have to get there and then back into it, however you want to analyze that situation, with AI, with technology these days, there's nothing impossible to do. And the biggest thing is try to take those limited beliefs out of your mind. I meditate a lot. So to be honest with you, I don't have many, I really don't have any limited beliefs. Because anything's possible. It's how hard do you want to work and how are you going to build a roadmap to get there?
Yeah, I mean, sometimes as a CEO, you've got to limit those limiting beliefs because your team
feeds off your energy. Like, I mean, think of your children. If you have children, your child feeds off your energy, and you can see that very closely. If anyone who has children, if they ever saw their child fall, their child automatically looks at you, and then whatever you do, they react. So if you say, "Oh, are you okay?" they're going to start whining and crying.
Right.
My son, for example, was playing soccer. He got smacked in the face with a soccer ball. Nose started bleeding. He looked straight up at me. I said, "You're good." He came over to me. I wiped his nose off. I said, "Get back out there. Your nose is not broken. You can still breathe. It's just a little blood. Go." And so that right there with that mentality is totally different compared to, oh my gosh, we're going to stop this. We're not going to play anymore. Let's fix your nose, things like that. Whether you believe it or not, it's instilling into the mind. Another example, my son had a soccer game last weekend, and he did not do well. He did not play well, nor did his team played well. They ended up losing. It was like 4-3. They lost, and so the parents over here were saying, "Hey, good game, good game, good game." And he came to me. I said, "That was not a good game." I said, "You did not play well, nor did the team win. It was not a good game." And the reason why I said that is because, and I'm not going to correct their children, but the reason why I said that is because you as a parent saying good game, you are now letting your child know that the level of playing that they just did was good. Well, in my eyes, that level of playing was not good because they lost. And so that's why I told my son, "Hey, that was not a good game. You guys did not win, and you did not hustle fast enough. You did not hustle long enough, and that's equivalates to a reason why you guys lost." And so I broke it down to him so he understood, okay, next game, I'm going to change the way I hustle. I'm going to change the way I play to get a different outcome. Now, I think like that, and a lot of other parents may not think like that. But I think, to me, whether he's taking that information in and he reacts to understand it at that given moment, I promise you the brain is like a computer. He's going to take that information in throughout his life as he gets older, when he knows that he needs to change the way he plays if he wants a different outcome.
Yeah. Yeah. I think some people out there might be like, what the hell? Like, it might be offended, but it's not Chris out there berating his child or something like that. We're talking about having a conversation with your child, being transparent, having an open conversation, which most people try to avoid, right? And talk about performance, talk about, hey, how do you think feedback, right? How do you think that went?
Yeah.
How do you think you can do better next time? Like, how can you improve? Like, those are the people, if you teach him the right things like that, he's going to succeed.
Oh my God, yeah. And the biggest issue, or the biggest thing I do not want is and this is my opinion, is that your goal as a parent is to prep your kid for life, in my opinion. Your goal is to make sure that individual is well-rounded, with professionalism, class, respect, right when they pass 18 years old as an adult. And obviously way beyond that as well, but your 1 to 18 or newborn 0 to 18 is you instilling great moral values in that child so they can be a wonderful individual to society. And that's my opinion. And so if you still instill values between, under 18 years of age, and when they get into the real world, they'll get their teeth kicked in. They're going to get smacked across the face and be like, wow, this is the real world? I wasn't prepared for this. And now, to me, if I'm not preparing my child for success in whatever career he wants to go in, I did not do my job as a parent. I feel like I failed because I did not do my job as a parent to prep him for the real world. Because you and I both know, Seth, the real world's tough. That's not right. Easy. And sometimes you get blindsided, in business, and I'm not talking fighting, but you get blindsided in all different type of things, relationships and things like that. And it's our goal as parents to prep the children for that, in my opinion.
Yeah. In real life, they're not going to tell you did a great job when you didn't do a great job.
No, they're going to tell you that you need to do better and you did a poor job, and this is how you need to do it.
Totally. Yep. Give me your top 2 core values and tell us why.
Yeah, I think a big thing when it comes to that is one is staying true to your word. If you're going to do something, do it. If you're going to say something, do it. That's a big thing. Even if it comes down, for example, with my son, I told him one day that we'll get a donut. I don't eat donuts. I'm a health nut, but he wanted a donut, and I said one day we will. And he reminded me, and I said, "You're right." I turned the car around and drove out of my way to specifically get him that. And the reason why is because I stay true to my word, and he knows that. So I think that's super important as a core value. And treating people right is another good philosophy when it comes to your team, when it comes to your operation, your company, because they are the people that are essentially believing in you. They're trusting in you. They're instilling their trust and values in you to run a wonderful organization. And so I think that right there is super important as well.
Love those, brother. How are you raising the bar in your life and in your business?
Yeah, my bar is always raising. I look at myself in the mirror, and I will tell you I'm my biggest competitor, and I am my biggest critic. I'm my biggest motivator, alongside my son with motivation. But my bar is always raising because I'm always pushing myself to new heights. And it's exciting. It's fun. I want to see how far you can push yourself and motivate yourself. And it's also the same way with the team. You can only do it to a certain extent. And I love it when my team holds me accountable and I hold my team accountable. It only makes us better as a organization. And I think that's how it should be.
Chris, it's been awesome to see you again, brother. Tell us more. Tell our folks where they can find out more about you.
Most definitely. You can go directly to my Instagram, Chris_Salerno_. We do have a podcast called The Chris Salerno Show, but those are the two places that you can hear me, see me, talk to me, and get more knowledge.
Love it, brother. Thanks again.
Thanks so much, Seth.
Thanks for tuning in to Raise the Bar Radio. If you enjoyed today's episode, make sure to subscribe, leave a review, and share it with someone who needs to hear it. Keep pushing, keep building, and keep raising the bar. Until next time, enjoy the journey.